Holy moly, what a day in the markets. This is actually one of my favorite days in the markets of my entire life. I'm going to tell you why. Don't skip ahead either. I'm going to show you something. You need to stick around. Let me show you the kind of confluence we're getting. It's uncanny. You have to trade this. You have no choice but to trade this. You're crazy if you don't trade this. Look, first of all, we've been talking about the broad indices coming back to these February 2020 levels since I started this channel. In my very first video, I was saying, look, that's the bare minimum where we got to go. It just made sense. It's logical. It's rational. It's reasonable. And here we are, a few ticks, like not even 1% away from this spot. And look what it did on the weekly chart. It came down and it kissed this 200, all right? That's on the Dow. Let's go to the NASDAQ. Look at this. We are only a few points away from coming to this trend line is what we're doing. Look, this is a 13-year trend that goes back to 2009. It does not like to break this trend, all right? Any violation is immediately revoked. This is where we are, a few ticks away from this, okay? Meanwhile, on the S&P, a perfect rest on the 200, which is what? Just a few points off of this 3,600. That was our first spot on the S&P. That was our first spot. 3,400 is better, but we knew 3,600 would be crucial. Look at the confluence you're getting in these markets, but it doesn't stop there. It doesn't stop there. Let's go down to Bitcoin. Look at what Bitcoin did. It came down, kissed, and rested at the same equivalent spot for itself. This is the equivalent spot, you understand? It came down and it rested on this key support level at 20,000, just above 20,000, okay? But again, it doesn't stop there. Let's go look at silver. Agnico Eagle, look at this. Came down. We knew it was going to happen too, right? We knew it was going to happen. It came down and it kissed this trend. And what did it do? Rallied hard. Rallied hard on its trend, on its major support going back for, God, ever. I can't even, I got to zoom out. Let me look. Look at this. Look at this. Came and kissed it and left. Just what it's supposed to do. In Confluence, by the way. Let's look at the GDX. Came down, kissed it and left. Double bottom. Double bottom. Everything's putting in a double bottom. We predicted it. Come down. Boom, boom. Double bottom. All right. Key support. Everything's doing it at the exact same time. Look at BTG. Do you see this? You see how crazy this is? Look at this. Kiss. Kiss and leave. Come down and touch that trend and leave. Okay, this will be an effective double bottom. I'm telling you, I saw this coming a mile away. I saw it coming a mile away, and that's exactly what we're getting, guys. You have to trade this. I am telling you. What about Cameco? What about Uranium? Came down, kissed the trend. That's where it rested. In confluence with everything else. In confluence with everything else. Do you see this? Look, hold on. Let's keep looking. How about UEC? All right, holding up a little stronger. It is than Cameco, but it's in the same place. It's just above this double bottom. Just above this double bottom. And that's the pivotal moment. The pivotal moment. That's what you're looking for. It's that double bottom. So you might not quite get it. Remember, I talked about this so long ago about how uranium like to put in double bottoms, and it likes to put them in as a slant too. You see how they slope up? The right side usually a little bit higher than the left one. It likes to do that. You're getting what uranium does. You're just getting it. And the key takeaway here is that all of this stuff is happening in confluence with everything else, right? So this is what you have to trade. This is why I've been pounding the table about this moment in advance so that when it happened, you would have the confidence to see it, recognize it, and strike, knowing what it is and where it would go next. And by the way, you do know where it's going to go next. So let's say, for example, you get a double bottom. This applies to gold, silver, whatever. We're just using the Cameco chart because it's so clean. You measure this. You come down. All right. Here's how you're going to play it. All right. Let's assume I'm right. Let's assume we get a bounce here. Okay. Here's your test. It's right here. Okay. This is your double bottom pattern. When you get here, I don't care what it is. If we turn around and get denied, we sell. Everything we're buying right here, we're going to sell it right here. You understand? Or if we break, if we peekaboo and come right back down, we sell. You understand? It's just that simple. It's just that simple because if the pattern fails, it's going to hurt. It's going to come right back down. Hell, it might even come down here. All right? It's not going to feel good. But this is the play. This is how you play it. If instead we break up, it's a measured move for upside. Okay? And what do I mean by that? It means if this double bottom plays out and comes to fruition, we know where it's going to go because you can measure the move, which is about $8.22. Okay. And then you pick it up, $8.22. And that puts us, right here at $36. Puts us right up on this trend line again. That's where it'd be up here in this trend line. So there you go, right? That's the measured move. That's what you can expect, and you can apply this to anything. That's how it would work out, okay? So you need to buy with confidence, buy with conviction. We'll wait for the swing, and if we fail, we sell. All right, and then we load up on all this cash again, flush up with cash for the next move. It's just that simple. Okay, so when you see something like this with all this confluence that the market's giving you, you have to act on it. You just do. You have to act on this. It doesn't make sense not to. You're getting too much confluence, guys. All right, and by the way, you're tracking the big names too. So if you're in uranium, you're watching UEC and Cameco, and what you're really watching is for that double bottom. Because maybe Cameco breaks this trend line. That's okay. As long as it doesn't lose $20, as long as it doesn't lose this low right here, then you're golden. All right. And so even if you want DNN, even if you want Global Atomic, you use Cameco, you use UEC to hit that double bottom. All right. So this is why I have 50% that I spent here. Does that make sense? All right, so if we break this and come down to truly get that double bottom, I have more to buy, and we'll evaluate it when it happens to see. But let's say hypothetically Cameco comes down, okay, maybe another 5%, then maybe your Global Atomic comes down, somewhere down here. Maybe it comes right here, actually. Maybe it comes down to $1.82. That makes total sense, right? If it's starting to look like Cameco's breaking its trend line, it's over, a lot of people are going to start freaking out and selling, and your smaller over-the-counter names might flush down into a level like this. And so you're going to use your Cameco, you're going to use your UEC as your guide for where your lows are going to be on everything else. Does that make sense? Okay, same thing is true with silver and gold. You're going to use your Agnico Eagles, you're going to use your Newmonts, you're going to use your Franco Nevadas. This is just how you play it, okay? These are your guide. The big guys are your guide to what happens next. And look, this stuff is playing out so well. Even in, let's look at our fertilizer. Look, we're coming down. We're getting confluence with the trend line in the 50. We've been looking forward to this for so long. And we knew not to chase up here because we knew it didn't look good, right? We talked about this pattern for a long time, looking like crap. And then in IPI, we have eyeballed this level for a long time. Remember, if you're new to this channel, we bought this on the breakout on this channel, all right? And then we sold here at $1.08 because this was a measured move, right? Because this, remember how I just showed you about double bottoms in Cameco and how to use it in the double bottom we're playing right now? Well, this was a double bottom too, and it's a measured move, and the measured move was $1.08, and look where it sold off. Yeah, it went a little bit above it, but we sold at $1.08 where you're supposed to, right? So we got 100% of our profits locked in, okay? And we've been waiting for it to come back here to buy it again, right? Because on this channel, we don't just buy and we don't just sell, and we don't just fear porn, and we don't just get excited about everything. We play the market intelligently, right? So we buy and sell, and we do it successfully. And I think now back down here in agriculture, you're looking to start buying again. Certainly, you're going to start accumulating again. Sure, is there downside risk? Yeah, maybe to here, maybe down to $40. But you pretty much have to buy if you want exposure to this space. You have to buy here. It's just an obvious. Look at the confluence that you're getting. Look at the horizontal support on the 50. After everything we've talked about to this point, do you see the confluence that's happening? The market is giving you the bottom. Because here's why. If you break any further, if you start going down any further, right, then things really start to break down here. And they just do. Everything loses its trend. Everything starts to sell off. Everything gets it's over. So this is the scariest place to buy, but in a way, it's also the best place to buy. But this is why I'm spending 50% of my cash, right? And, I'm holding some, hedging just in case we get that downside. But you have to take a position at these levels. It just doesn't make sense not to. Look at how gold is acting here. It's up 2%, silver up 2.5%. So look, gold fell out of this trend, all right? Retested this one and has bounced back up into this one above the 50. Closed above the 50. Guys, just can't pound the table enough. And look at the ratios too, by the way. Look at these ratios. Look at how much gold is exploding against everything. The GDX, gold itself, it is blasting off against everything. I told y'all this would happen. I've been pounding the table on this too, that gold was going to break out against everything, and this is a good thing. If you own uranium, it's a good thing. If you own fertilizer, it's a good thing. The reason is because gold's going to pave the way as the monetary metal, as the paradigm shifts and the end of this financial system that everybody's starting to appreciate is happening. It's going to pave the way for everything else and all the commodities we own to take the next leg up. All right, it's going to grant permission, right, on a basis of commodity values to go up. Okay, it's just what's going to happen. It's breaking out against uranium. All right, look at this massively oversold level. It's getting a huge bounce. First of all, this is bullish divergence on the RSI, which was massively oversold, and it's getting a huge rebound here against energy. Okay, it's breaking on tech. All right, getting ready to do some big things here on tech. But look at the Dow. Same thing. It's getting ready to break out of this range. Look, the moving averages are up, right? We're about to get the golden cross on the weekly, mind you. Look at the NASDAQ. Let's go. Golly, I just can't. It's too much, guys. It's too much. It's happening. It's just happening. Gold's breaking out of a descending wedge on the NASDAQ. You have to buy. I just don't know what else I can say. I don't know what else I can say. It's here. The moment's here, right? It's happening before our very eyes. And sure, I can appreciate if we come out, we'll probably get a retest or something. I get that. You should expect that too. But the thing is that it's happening, right? It's happening. It's finally happening. And all the people who have patiently waited and have been investing for this moment for so many years, it's finally here. And, on one hand, it's very scary. But on the other hand, we're about to be vindicated for all of our patience and table pounding that we've been doing. So to reiterate one more time, listen, clear double bottom, clear confluence across the market in commodities broadly, in the indices broadly. Everywhere you look, you see it. I think this is a clear signal of what's to come. At the bare minimum, I think we're going to get a bear market rally here. It's a very logical place to start one, being at these levels. I think there's kind of a market consensus now that everybody was looking for these levels. Not to say we won't break down a little bit more, especially tomorrow, but certainly we are sooner than later away from some kind of a rally, I would suspect. I think the market's pretty oversold here, and this is how I think it's going to play out. I think when you get this bear market rally, then the things we like, they're gonna rip with it, right? That makes sense. And I think we're going to be able to test our double bottom, okay? And if it gets rejected, we sell, all right? But if it flies, then hold on tight because it ain't ever coming back. This is probably the cycle low, and it's going to be there for, decades. So this is why it's so important to get in here. If you're really, really conservative, I guess you could wait for this double bottom to play out and break through. But geez, why would you want to do that? Why would you not be accumulating down here on such obvious support? That's what I'm doing. And, I have saved some cash in the event that I'm wrong. You never go YOLO anything, right? I've hedged. And so in the what's to me an unlikely scenario, we break even further down, I will be taking advantage of that too. I mean, look at this. It just doesn't make sense. I mean, this is such a strong buy. I hope you're buying too. And be confident out there in the market. Fade the noise. Stick to reality. And invest in those fundamentals. And it's all going to pay off.